Bitcoin is up big time in one of the biggest Bitcoin reversals that we've seen all year. And this is as traditional markets are faltering, looking extremely weak, proving Bitcoin's non-correlated nature. However, there is danger in our midst as global leverage ratios are now starting to reach unstable levels once again. This means that there will most likely be at least one more shakeout before we get the fourth quarter face melt that we've all been waiting for. Now, I do believe that Q4 ends with a bang to eloquently and poetically wrap up this bull run that we've been experiencing since early 2020. But like I said, I'm expecting some rocky and choppy waters before the blue sky breakout that is the key to financial freedom and intergenerational wealth for many. So with that said, let's dive in because today we have danger, warnings, as well as massive bullish signals across the board. It's a tale of two cities, and I'm going to be giving you the keys to understand and unlock it. My name's Elio Trades, and if you want to make the absolute most money in crypto, then all you have to do is follow this channel, subscribe, put that bell notification on, and I'm going to be putting you in a position to be way ahead of the market. With that said, let's dive in. So this is an image that was sent over to me by my good buddy Krown, who's one of the most gifted futures and options traders in the entire crypto space. And what do we see here? Except for a very, very strong rebounding of the global leverage ratio. This means that once again, the market is getting greedy and leveraged to the upside. People are trying to borrow money to trade their Bitcoin at a higher velocity. And that means that we risk, once again, a little bit of a leverage wash. It created a lot of the price washes that we've seen over the last few months. So keep an eye on this because this is precisely what will create a massive down spike before we end up getting our Q4 face melt. So this is the big warning sign that we have to be aware of if we want to keep all the variables in our purview. Of course, that is some blood that I will be buying personally. You make your own decisions. Now, once again, Bitcoin has proven itself one more time. In the times of peak uncertainty in global financial markets, we see BTC showing incredible strength, proving it is indeed the safe haven it is intended to be. Most importantly, Bitcoin has surpassed a total market cap of $1 trillion once again. Now, of course, we see Will Clemente in here explaining that Bitcoin had a little bit of a short squeeze here with $26 million of Bitcoin shorts, absolutely wrecked in 10 minutes. Again, shorting Bitcoin is bad for your health. Be careful. We'll talk about leverage in depth again at the end of the episode. Now, of course, today's BTC pump seems to have mostly been spot driven. This is the healthiest form of progression for Bitcoin, which makes sense with open interest being rather muted and liquid supply of BTC at record lows. However, despite the supply shock, remember the global leverage ratio is climbing up. So you got to keep your eye on that. And that's why this is a warning video and it actually is time sensitive. What we're seeing is that there are billion-dollar Bitcoin buys occurring. And what we'll see is that the people buying this Bitcoin right now are some of the biggest money bags in the world, the people who we could have only dreamed of buying this asset class all of 3-4 years ago. And even more bullish, we see the resilience that Bitcoin has during a stock market moment of weakness. This, of course, is the Bitcoin chart with the chart of the DAX shown below. Since the American markets have yet to open at the time that this was written, stock markets are in a clear downtrend while Bitcoin has entered at least a short-term uptrend. This is a huge disparity that we're seeing here, and one that is absolutely proof that Bitcoin is a disconnected asset from mainstream markets, although it does occasionally trade with correlation. Now, Suzu comes in with his take, one of the most legendary Bitcoin bulls. He says, for close observers of all asset markets, the current strength of BTC is quite remarkable. There is some confluence of Middle East, SoftBank, Latin American, high oil, stocks dump, Bitcoin moon that may have my spidey senses tingling, to be quite honest. Intergalactic moves occurring at the moment, truly dynastic stuff. Barry Silbert says, Bitcoin knows something. I wonder what Bitcoin knows. Now, once again, Bitcoin's strength in a time of macro uncertainty could have different reasons. The spike in inflation metrics, the dwindling trust in the US's ability to keep its fiscal and monetary policy in check. Of course, the continued onboarding of institutional investors who seek Bitcoin as a system hedge. In other words, a way to get off shaky stock markets. We know the mainstream markets are shaky. We know that they've been upheld by inflationary money being pumped into the system, which is of course the very reason why Bitcoin was created, as an opt-out for that system. So is it a coincidence that Bitcoin has broken 50K at the same time as the news media is full of stories about a potential US default as a function of a failure to raise the debt ceiling in October? The chart shows that Bitcoin, the white line, sparked exactly as US T-bills, yellow, spiked. Very interesting. Even investing legend George Soros, the man who broke the Bank of England, is feeling uneasy about the stock market, confirmed through the CIO of the $27 billion Soros Fund Management family office to hold Bitcoin today. It is the first on-the-record confirmation that George Soros is holding crypto. And is it any surprise that the billionaires have scooped up the dip? We know who has been buying. We know who has been engineering those FUD stories. We know why the China story has run and run and run time and time again. We know why these old stories are getting dug up and somehow run on Forbes and BBC and CNBC and all the mainstream investing news sites, all in tandem, as the Bitcoin whales dump the price to make it seem like there's some kind of systemic change, a sea change. And who are they targeting? You. They're targeting you, the average small holder. They want you to sell. They want to own these networks, just like they own the networks of the legacy system. Here we see Soros is cashing out of stocks, putting some capital into cryptocurrencies. And do you notice it says cryptocurrencies, not just Bitcoin? And meanwhile, we get even more green flags, something that probably all of us knew, which is that Bitcoin and crypto were never going to be banned like they are in China, or banned in China. We say that with heavy, heavy air quotes. But we know that they will be regulated to some degree. And this regulation, remember, overall, over the long term, is extremely bullish for the ecosystem. Short term, a ban was put off the table. They will not ban your crypto. This is not being made illegal. And that statement alone was seemingly a significant green flag, because the reality is a lot of people don't understand this stuff. They think that there is a looming potential for a government ban. And so hearing from government officials that this stuff will not be banned, but yes, probably regulated, that is a very big green flag. Remember, once firm regulation comes in and the banks and the big financial institutions know that they can dump money in here with impunity and on terra firma legally, then there will be a massive, massive, massive inflow of new capital to the tune of trillions and trillions of dollars. And remember, there's some kind of blood magic here where market caps tend to expand about an estimated 25 to 50x of every new dollar that is brought into the system. So if we get $1 trillion, it's estimated that 25 to 50 trillion new dollars will be created in the form of market cap. Market caps are by no means a one-to-one comparison with the actual amount of money that can come into the system. Now, for some regulatory crackdown bear market game theory, here's a good one, and I think you should keep this in mind. We have Maya Zahavi saying, my regulatory crackdown scenario is impose stablecoin limiting their issuance to FDIC banks. Maybe. A flight from stablecoins will price them at a discount. Maybe. FUD will crash crypto, discounted stablecoins. Approve crypto ETFs for federal financial institutions and banks to buy the dip. So essentially, this is once again another sort of orchestrated play for the current financial system to come in and control more of crypto. I also saw this take coming out of Michael Van Poppe, and he says deflation and crisis to come within the next 12 to 18 months. Sell all your crypto in max 6 to 9 months, sit on cash, buy crypto commodities 1 year later, and you're king for life. Now, of course, this is cute. It's a cute way to look at it, perfectly timing the crash and perfectly timing buying the blood. This is a super high risk game, and so I encourage everyone to think of everything in shades of gray as opposed to black and white, saying, hey, I'm gonna take this much, put it off to the side for dry powder, this is my forever Bitcoin fund, this is my forever this, and have more of a scale here that you scale in and out of positions. Don't go all in or all out, because then most likely you're gonna miss it. There will be another massive pump, you'll jump back in, you'll think that, oh no, this crisis isn't coming, then it does dump, and you're worse off than you were before. So just make more methodical plans. But I do believe that there is a deflationary crisis that will loom over the next sort of year and a half that is a product of global instability right now. And then, of course, the ability to have dry powder, to have cash on the sidelines, to buy that crash is going to be huge. But that's not really where my head's at right now. I'm focused on Q4 strategies, taking home a lot of bacon for winter. Keep saying that, but you need bacon in the wintertime. Sorry, vegans. And finally, as the leverage in the market continues to explode, remember that leverage trading is a game where you're playing with fire, and most people lose this. Almost everybody gets wrecked playing with leverage. Yet for some reason, it's where all the noobs go and focus their time. They're like, oh, if Bitcoin goes up 1%, I could make 100%. Do not trade leverage unless you're a pro. And if you're a pro, manage your risk. You know what to do. But for a lot of people, it's just not right that they trade leverage without years of experience. And so if you're new around here, leverage trading, very, very, very bad. Unless, of course, you're a seasoned pro and have been doing this in other markets for, 5-10 years. So as we approach a Q4 face melting pump, it's important to keep your eyes on warning signs that there may be another washout, and know that this is part of the game. This is part of the psychological warfare, the economic warfare that is embodied here in this crypto movement. But I believe in you to outlast and to see your way to Valhalla, which here in Q4 means being in the highest quality altcoins in L1, gaming, metaverse, NFT, DeFi. These sectors will pump like crazy at the end of Q4. I believe none are more relevant than gaming and metaverse. I believe that the projects in gaming metaverse, those ecosystem tokens and the assets within important NFT communities will have the highest upside. I'm going to be taking those gains and actually jumping into stable coins largely towards the end of the year. I'm talking about December. I'm going to be looking to sell the altcoin peaks into stables, get ready for winter, hoping it never comes, but being pretty realistic that a blow off parabolic top looks fairly likely given how parabolic the rise has been over the last several months. Now, of course, creating a huge amount of dry powder is never a bad idea because you can always reallocate to new opportunities if the bull market keeps going. But what I'm looking forward to is creating a massive, massive war chest that I can use to go reinvest in the market if we do get a down cycle in 2022 at some point. I want as many resources as I can to trade that cycle, to go ultra long on the future of crypto. And when the next cycle arrives, I won't even have to be trading. I'll just be sitting on the best bags in the industry, riding it up, smiling, knowing that I probably sat through the last bear market. Let me know what you guys think in the comment section below. As always, crypto is very risky. I encourage you guys to make your own strategies. If you got some value out of this though, smash that like button. Come on, give me a thumbs up here. We're bringing you daily content each and every day, helping you identify projects that are 400x gainers like Bears Deluxe, no pre-sale IDO special access treatment projects for you, no walled gardens, just real opportunities here on the market that anyone and everyone can get into by working hard, looking around corners, and better understanding this crypto ecosystem. With that said, I'm Elio Trades. You can find me on Twitter at Elio Trades, and I'll see you very soon on the next episode.